Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today. And as usual, don't forget to like this video and subscribe to my channel. That will be really helpful for the YouTube algorithm. So thank you very much for joining us. So in today's video, I'm going to be talking about what happened in the markets last week. And I'm also going to be explaining some key parts of my portfolio and future plans. As we look at the performance last week, our portfolio was up about 0.51%. If you compare that with the other major benchmarks, the Nasdaq was up about 0.7% and the S&P was up about 1.5%, and Bitcoin was mildly up about 1.92%. So last week was there was a slight rise for the US markets. And also for Europe. It was a very great start to Monday and Tuesday in the markets, but we had a slump later on in the week. And also we saw crypto remain fairly flat last week. However, it is holding up pretty well. We then did some short-term trades in ASOS, in SRTY, and also in BASF. And this helped us to generate some small profits as well. If we look at it on a 2022 benchmarks against our benchmarks, our portfolio is down about 37.45%, slightly down from the Nasdaq, which is down about 31.91%. And the S&P 500, which is down about 23.64%. However, if we do compare that to Bitcoin, which is down about 58.38%, and some of the altcoins in crypto are down even more, between 80 and 90%, then our portfolio has held up pretty well considering what's been happening in crypto and our crypto exposure. However, our portfolio does have, I think, a lot more upside potential, as has been seen over recent years, than most of these benchmarks. So if we do have a turnaround, I can see us vastly outperforming those benchmarks, especially over a long period of time. However, there could be some volatility. If we look at the main news for last week, as I said last week, the S&P started off very well in the markets in general. And on Monday and Tuesday, we saw a rise of 5.6%. And that is the best two-day move that the markets had since 2020. One of the reasons for that is there were some downside surprises in economic reports and data that was released. And usually you say, oh, why would that cause the markets to rise? Well, as there is more data that's released that shows that there is a lot of pressure on the economy, this does start to raise hopes that the Fed may slow its interest rate hikes. It's no surprise that the majority of the downfall of stocks this year in 2022 has been because of those kind of fiscal tightening. And the rate hikes that have been implemented and are planned to be implemented in the future. And if they were to halt those or they were to pivot, then it's likely that we would see some spikes up to the upside. Also, the job openings fell to their lowest levels in over a year. It's been historically very high levels of employment and there's been a lot of open jobs in the market. However, this has seemed to have peaked and is starting to come down as the economic realities start to fall into place. Also, we saw on Wednesday the OPEC Council, which is a group of oil producing nations that come together around the world. They announced that they were going to cut 2 million barrels per day of oil, and that's kind of been in the light of the oil prices were going down. However, now over the last week or so, they've started to go up again and now over 90. And this does start to put some concern around, again, inflation, because a major component of oil prices and inflation is around the oil prices. So if oil prices and natural gas prices spike up, this could put further pressure on inflation, which then in turn could force them to increase interest rates further than expected. Shares in Europe also gained ground on hopes the central bank might start scaling back interest rate rises. And this is because there's a lot of data to say that European economies are struggling. They're also very reliant on Russian oil and especially gas. So there's a lot of struggle. So there's some fears that the European economy cannot withstand increased interest rate increases. However, contrary to this, we've seen the Eurozone inflation has accelerated to 10% in September. And in the latest minutes of meeting from the European Central Bank, many policymakers had backing around rate hikes, and they said that it would be was required and would probably be required in the future in order to bring down that inflation number. So it's quite clear, really, that inflation probably hasn't quite peaked yet in Europe. There's also been some Russian retaliation around the Crimea bridge explosion, which happened, and they have started to make more strikes on Ukraine. And this in turn has also contributed to higher commodity prices, such as wheat, oil, and natural gas as well. So this could put further pressure on inflation. We also saw last week that China's reported the highest number of new COVID infections in over a month. And this is mainly driven by the Chinese traveling around the country last week for their national holidays. And it's a time where they go and see their family and friends in different cities. And this has caused some concerns that there could be some localized lockdowns again in China. If we look at the top 3 performing stocks for last week, and the top performing stock for last week is ProPetro, and that was up about 15.61%. The second best performing stock for last week was Bluebird Bio, which is up about 12.89%, which has had a pretty good last couple of weeks. However, it's still far behind. And the third biggest stock in our portfolio last week was Starbulk Carriers, which was up about 11.04%. And recently I've made an effort to slightly increase our oil and shipping related stocks in our portfolio. And this is because I am expecting certainly over the next couple of months for there to be more pressure on the oil prices. And it's a real kind of battle between what governments are doing to try and potentially bring that down, and things such as the OPEC Council want to ensure that they have very strong oil prices as well. So I expect oil to do very well over the next couple of months or so. If we look at our Death by Charts edition, I just wanted to point out the chart to the left. This shows that the S&P 500 swings over this year. And what it is really doing is taking a very kind of normal pattern in the bear market, where you have this kind of constant declining of prices, but it's also met with some bounces along the way. So we've had kind of several bounces this year, and that is quite normal in a bear market, because what you see is you start to see a lot of kind of doom and gloom in the market and these doomsday scenarios, and when some news is not quite as bad as it was expected and surprises to the upside, you start to see these spikes. So it'll be interesting to see when it bottoms out, but I think it's a very dangerous time to be shorting, and I'd much prefer to gradually increase my kind of core positions, because all it would take is just a mention or just a insinuation that a pivot, a Fed pivot in terms of interest rates could be on the cards, and we could see quite a violent swing up. However, the chart to the right, you'll see that this has been the longest correction that we've seen since the financial crisis in 2008, 2009. We have seen bigger swings and declines to the downside, for example, at the start of the COVID crash in 2020. However, it was much shorter. So this is kind of the longest one that we've had since 2008, 2009. I also wanted to just point out what I mentioned earlier about the job openings. You can see that we hit a peak in March 2022, and we started to see a reduction in the total job openings over the last couple of months. So as we move on to the crypto news and views, you will see that Bitcoin has remained flat at just above 19,000, but is holding up well, especially considering what's happening in the macro economic situation at the moment. So to be able to hold up well amongst that is a good sign, and we're starting to see some decoupling, which was very correlated with the Nasdaq before. We're also seeing 120th day Bitcoin is in the 18.5 to 24.5 range. Eventually, it will have to either break out to the upside above that, or start to test those yearly lows again. However, this is kind of a normal pattern, and when we do reach a bottom, which I think we already have, but if we haven't, then we're very close, then we'll see a much widened kind of bounce off the bottom, and I'm expecting us to kind of have a period where we kind of range between say 25 to kind of 45 before the next Bitcoin halving. So there is some really good upside from these bottoms. Also, the Bitcoin mining difficulty has soared by 13% to a new all-time high. The Bitcoin blockchain every 2 weeks has a mining difficulty adjustment depending on the number of hash rate in the network, and the hash rate has been soaring recently, which means that the mining difficulty is soaring, and this causes a lot of strain on miners who not only are faced with it making it a lot more difficulty to mine a block, but also the prices are very low. So I'm expecting to see some consolidations with the Bitcoin mining companies. Also saw the Binance Smart Chain suffered an exploit last week of about 100 million on a bridge, and what this caused a lot of reactions from the public, not only because of the exploit, but also because it was said that the Binance Smart Chain is also can be very centralized, because they stopped and halted that Binance Smart Chain as soon as that happened. So that kind of led to some criticism. However, I am still very positive on Binance BNB and Binance Smart Chain. I think that there's a lot of investments that's going into it. There's a lot of very clever people that are building on the network, and they have a lot of funds to fund developers, for example. So I'm expecting a good future for it. Also, there was a 𝘁cie exposed customers holding in a bankruptcy document. This led to a lot of kind of criticism, because it showed people's names and how much crypto that they had in their 𝘁cie accounts. And this has been kind of used to kind of ridicule some people that had funds in 𝘁cie. So that's been a very difficult time for many people that have been invested in 𝘁cie and can't get their funds out. We're also seeing these rise in stablecoin issuance, and we saw that crypto and payments firm Mobile Coin has launched a new stablecoin, electronic dollars, which I generally think that the stable coins, as long as they are regulated and they can keep their peg, that there is a lot of utility not only in trading but also in commerce and remittance for stable coins moving forward. If we look at the Bitcoin charts and we look at the days from the all-time high to from the previous all-time high to the new all-time high, and we look at the different cycles, we can see that it's taking a very similar road to the previous cycles. And what you generally tend to see is that you don't start to test those new all-time highs until after the next Bitcoin halving. And then you see kind of a supply shock and you start to retest those all-time highs, but they generally kind of bottom and the lows at a very similar time throughout the cycles, generally about kind of 10 to 13 months after you plunge into the bear market. So as I said, I think we're very close to the end of this cycle, and I'm using this as a really good opportunity now to start to average into some of my crypto positions, and I did this during the last cycle. I generally think that there is the least risk when you're at the bottom. There's very little downside potentially left to go, and the upside is much larger, so it's an asymmetric bet. And so I will start over the next couple of weeks to increase my positions in crypto. If you look at the difficulty adjustment, as I said, it's become a lot more difficult to mine Bitcoin, and we're seeing an increase and an uptick in hash rate, which has increased the mining difficulty. So thank you very much for listening to my video today. As usual, don't forget to join my Discord group. We have a really lovely community of people in that Discord group that are constantly having great discussions with each other. And you can also ask me any questions that you may have in that Discord group. Until then, have a great week ahead.